Daily outlook into Friday, June 12th. You can see that the previous day was an expansion inside of the range. The market respected the range of 50% of the weekly BISI. Right, this was the discount array coming inside of the previous day, even from the perspective of a lower time frame, since the market had essentially opened near range low. Right, and from those levels has expanded, okay, leaving this profile being what a classic buy. We'll look at it on the lower time frames. Right, and we know that expansion profiles tend to leave fair value gaps, order blocks, rejection blocks, right? They tend to leave PD arrays near 25 or 50% of the ranges. Okay, so we'll be able to identify that on the lower time frame. This is going to be an interesting closure, in my opinion, right? How the day of Friday will close. The reason why is because obviously in terms of a monthly profile, right? The first week of the month here was an expansion week, okay, represented as a bearish, a Wednesday reversal, right? This it's a fractal of a daily profile, it's a New York reversal, and right then Monday open, retraced inside of the range on Tuesday, and Tuesday, right, established a dealing range, right? The range high, range low, rated the highs, rated the lows, and came back right in the range. Wednesday stayed internal to that range, and eventually the previous day, right, maybe an hour or two after the open, revisits 50% of the weekly BISI and creates a divergence at the weekly low. Right, and from there, this fuels the expansion higher. Right, so the idea is, okay, is this the low of the month that's being created here, right? Or has it been created already? This was my idea coming inside here of Wednesday, right? Then Wednesday ended up delivering as a bearish expansion profile, right, through a New York reversal. And so at that point, I wasn't convinced anymore that this was going to be the low of the month. I believe that the market would have needed to revisit discounted price, okay, 75%, or the low of the weekly BISI. But that narrative quickly changed, right? Since from the open, or an hour or two after the open, creates a divergence and expands, right? So the question in terms of the monthly profile is the low of the month really in? Well, the way that the profile that will form today, it should tell us a lot about that. Okay, because in terms of a weekly profile here, in my opinion, there's two possibilities, right, based on how yesterday delivered, okay, through an expansion. And this would look like, in my opinion, the range of, a profile of a, say, consolidation Thursday reversal, right? Thursday creating the reversal. How do you know it's a reversal? Well, Wednesday was a New York reversal, Thursday was a classic buy, right? And this forming from a divergence at the weekly low. Right, the consolidation represented by what? Represented by Tuesday making a dealing range and Wednesday staying internal to that range. Right, so if the profile is consolidation Thursday reversal, then in my opinion, I believe that today should continue this trend, right? And should have a strong closure, if not past it, but inside of the premium SIB inside of the range. Right, and then if that were to happen, then I believe that we can assume that the low of the month has been put in here. But if today doesn't deliver as an expansion, or at least doesn't have a strong closure, right, even though this can be an open low high close profile, but then starts seeing a reversal phase inside of its closure, right, what would be the weekly profile? The weekly profile would be some kind of seek and destroy, in my opinion. Right, Monday creating a range, an inside bar, Tuesday outside bar, Wednesday inside bar, Thursday outside bar, right? You can see that. Monday here stayed internal to the range of Friday, so this is an inside bar. Tuesday took out the low and the high, so this is an outside bar. Wednesday staying internal to that range, this is an internal bar, and then Thursday engulfing the range of Wednesday, so this being an outside bar. Okay, so if today will fail to expand, right, and say trade inside the premium array and fail revisiting the range, then in my opinion that's when I will assume that the low of the month is probably not safe. Okay, because if say the profile here will end up being seek and destroy, the weekly profile, then you look at the first week, right? And what was the first week? The first week was an expansion. Okay, so if the market fails to create first week expansion, second week expansion, you know, this is a pretty good low, I have to say, okay, because of how it's respecting the discount BISI, right? It's unable to displace 50% of it. And so, you know, the low of the month could still be in, but if today fails to expand, right, fails to have a bullish closure also, this can lead to potentially high resistance price action for the rest of the month. Okay, the monthly profile could end up becoming some kind of, right, of swing to Z-ish. Right, the first week of the month makes a high and then consolidates the rest of the month. Okay, so this is in terms of the monthly profile, so we'll be interested in seeing today's delivery. Do we have a continuation of this reversal, right, the reversal of Thursday? If yes, then we could assume that the low of the month is in, right, and then that it will be much easier for us to trade going inside the end of the month. If not, if today revisits the premium array and fails to expand or fails to have a bullish closure, right, then the weekly profile would likely be something like a seek and destroy, and we would have expansion to consolidation. Okay, so the market may want next week to revisit, you know, some discounted levels inside of the dealing range, right? And these ranges are big, okay? And then so when the market creates high resistance conditions inside of a range of, you know, what is this, 7,000 ticks, right? 6,500 ticks or so. It's obviously not as easy to trade, right? You have to be much more patient. You have to pick your shots. You have to pick your shots nonetheless, no matter the conditions, but even more inside of a range that would be high resistance. Okay, so very important to see how today will close in terms of the monthly profile. Going inside the day itself, right, we still have the range of the weekly BISI. This was the discount level of interest, and we still have a premium SIBI, inside of the range. So in my opinion, likely the market is going to want to trade inside of this range. Will be important to see at what time of day and what's the reaction inside of this range. On a 3-week look back, I mean, there's not that much to talk about. The market, well, this is what's most important here, right? The divergence created a bit after the open with the weekly low, and then from there the market expanding higher, right? So we're now back trading around 50% of this range, right, of this overall dealing range that we have here. We have a fair value gap here, which in my opinion is important. Okay, why is it important? Well, if we're bullish, you want to see this fair value gap becoming reclaimed, right? You can see that the last 1, 2, 3 times that it traded into it, it used it as an inverse fair value gap, right? So all depending on the session profiles, right, and how those sessions have delivered in terms of a phase of price delivery will be important to determine on the lower time frames, okay, if this range is being reclaimed or is it still being used as an inverse level, right? Because if this level, which is located right at 50% of the 3-week look back, if this level starts to become reclaimed, then very likely we will trade back again to all-time highs, okay? And in terms of a low-hanging fruit for the day, right, if this fair value gap is reclaimed, you'd have the range of the premium order block inside of the range. On a 3-week look back basis, you can see the previous day's profile, which was a classic buy. right? You had expansion, consolidation, expansion. You can see how price traded around the two levels of interest for the day, right? We had a discount level of interest being the weekly BISI. Price traded to 50% here, maybe missed it by 10 ticks or so. Most importantly, creates a divergence at the weekly low, this, in the range an hour after the open, and from there starts creating bullish fair value gaps. Right, and eventually Asia keeps trading higher. London also expands higher and does what? Reclaims a bullish order block here. Right, this at the time at the open of Thursday when we were analyzing this range, we were saying how this was a bearish breaker, and this was an important bearish breaker because it was located right at 50% of the range of this New York reversal, right? So it was important to see, will the market trade at these levels, right, to trade lower, or will it trade higher and then start reclaiming this bullish order block to trade higher? And in fact, this is what the market did, right? There's a lot of trading opportunities residing on the lower time frames around the quadrants of this reclaimed bullish order block, either trading long out of it or trading short back inside of it, right? And using the quadrants of the reclaimed bullish order block as a take profit level. Okay, so we can first look at the range of the 3-day look back. We're obviously still trading inside the range of Tuesday. Well, whatever, I don't need to put this, right? We have the range of Tuesday. This is currently the 3-day look back high and low. So far the low of it has been rejected. How is it going to treat the high of it? Is it going to displace the high or wick the high, right? And remember, that's going to be important to see at what time of day price starts trading around this high. If it will, in my opinion, it's pretty likely that it will. I find it unlikely that the market will, reverse from here. Is it possible? Yes. But it's a type of trade, in my opinion, that most of the time won't work. Okay, so the idea is that the draw liquidity is range high, right? The market traded at range low, rejected, and then now is trading near range high. And remember, at that range high, we're trading inside of the range of a BISI located right at 50% of the 4-hour dealing range. So it'll be very, very important to see, okay, what time of day and what phase of price delivery is price creating around this high. So I would say that this is definitely a low-hanging fruit target for longs. An even better profile, okay, the best case scenario profile for me here would be some kind of classic buy or New York reversal, right? And here New York would give you the low resistance leg higher towards the drawn liquidity, and the reason why I'm saying this would be my preferred profile is because if the market starts trading higher from here, there's a lot of things that can happen, but my worry is that New York will have too much of a premium open inside of the range, right? And from there, in my opinion, is going to want to start doing this, right? Retracing the range or consolidating inside of the range if the market starts trading higher first, right? So ideally, I would like to see the market come back to some level of discount. We can look at that by looking at the previous day's range here. What the previous day's range was, what was a classic buy, so this range will leave us a fair value gap, an order block, something at 25 or 50% of the range. Okay, so we can actually look at that. Let's go back to a 15-minute. We can maybe first look at the price profile of this curve. Okay, and so what this tells us is that on the lower time frames here we have the range of we have a dealing range low. Right, you can see that New York here was a consolidation phase represented by, seek and destroys price action. Price takes the low, takes the high, takes the low, takes the high, takes the low, eventually rallies. Okay, starting going inside of the PM session. Okay, and what you can see is that, well, first of all, where is this located, right? This is one series of, or a series of down close candles on the 1 hour chart. And already you can see that this is located, give or take around 50% of the previous day's range. Okay? Above the range of the order block at 50%, what do you have? Well, you have a fair value gap that's backing it. Right, but if not above that, just looking at the profile of this curve, right, you can see that here you had a phase of reaccumulation to distribution, represented by what? A bullish order block. And right above this bullish order block, you have a pocket here, right? So this means that there's some fair value gaps being created inside of this range. Okay, so let's grade the previous range. Right, and essentially, this gives us the same information that the profile told us. Right, at 25% of the range, we have the range of a bullish order block. This bullish order block is backed up by a range of fair value gaps. Okay, maybe if you look at this on the 1 hour chart, no, maybe on the 30-minute, right here on the 30-minute chart, you have the range of a bullish fair value gap. Right, and right at 50% of the range, what do you have? Well, you have a very obvious fair value gap. Right, this is a very, very obvious fair value gap. Big fair value gap right through the range, exactly at 50%, cutting through the range of a bullish breaker block, and if you look on the 1 hour chart here, the range of a bullish order block. Again, at the moment, this is our lower time frame dealing range. Right, the low of New York from the current high that Asia is putting in. Now, obviously, this could keep trading higher, right? If price is really bullish, I would prefer it doing this, but it doesn't mean that it needs to come back and discount to trade higher. Right? If price from the open simply starts to expanding higher, creating bullish order blocks behind, creating bullish fair value gaps behind, but most importantly, doing so through the rejection block of the dealing range high that we're trading in on the 3-day look back, right, that can represent very bullish price action. Okay, some kind of classic buy day that just expands the whole day and is going to want to reach either inside the premium order block or all-time highs. Okay, if this scenario is not the one that's going to happen, right, so price rallies from the open, so it's creating order block and fair value gaps. Wait, let me put it back this level. Right, then here what do you have? You have the range of a 1 hour fair value gap inside of the range. Why is this fair value gap important? Because it is followed by, it is preceded by the range of a bullish order block. Right, so the market reaccumulated inside of the range and then expanded out of the range. Okay, the expansion is that it's an expansion because of the fair value gaps being created here. You can also track the 1 hour profiles here of these candles. Right, at least one of them will be a classic buy or some kind of reversal profile. Okay. Now, whether you want to use the 1 hour fair value gap or the 30-minute fair value gap, or one of the 15-minute fair value gaps here, that's up to you. But the idea is that there's an order block right at 25% of the range, and this order block is followed by a fair value gap. Okay, so that's level of interest number one, right? The range, say from 29,200 up to 29,400. I think that this range could create the low of day if we're looking at the range of some kind of classic buy profile, or say a swing to Z. Right, New York opens near the range of the pre-order block and sees a consolidation or a retracement. If not, if we'll be looking at the range of, say, a bullish New York reversal, then this means that, in my opinion, early on from the open, price would start retracing back inside of the range, right, creating some kind of double top, overall low resistance price action at the highs, right, and then would come back to the fair value gap, the order block, the breaker, etc., right at 50% of the range, right, and then you would want to see 9:30, 10 a.m. At 10 a.m. there's the University of Michigan inflation expectations. Okay, that can be a driver. But overall, this would be the idea. Okay, the idea, in my opinion, is that, well, first of all, what's the weekly profile? The idea of the weekly profile is that we're looking at either at a consolidation Thursday reversal. If this is the profile, then I want to anticipate a profile that forms low of day inside of the range of fair value gaps located around 25%, or if not, at the fair value gap itself at 50%. And if not, right, if the idea is that the weekly profile will be some kind of seek and destroy, then in my opinion, price can likely keep trading higher from these levels, will end up trading near range high and fail, okay, and come back inside of the range, say, and then could close, inside of the fair value gap here. I don't remember exactly when I was talking about it. Not sure if it was going inside Wednesday or the previous day, but I was saying how this type of large range like this can lead to a big, large, choppy range, okay, on the perspective of a daily chart. So that's what I'm saying is if price will first expand higher before coming back in the range, it's going to be very, very important to see how it treats range high. If it doesn't respect range high, in my opinion, that can provide good shorts back inside of the range. Okay, you'd have obviously these two, range of fair value gaps or the order block itself here as low-hanging fruit targets. But if the market is going to first trade lower, respect one of these at a key time of day, and the usual, start creating bullish fair value gap, bullish order blocks out of it, this would be the A plus. This is the A plus scenario for me, right? A continuation higher of the trend. Okay, so recap. Obviously, the previous day here was a classic buy day. We know that expansion days tend to leave fair value gaps, order block, any PDRA around 25 and or 50% of the ranges. We've analyzed what these two levels are. We saw that in premium, price left the range of a fair value gap. This fair value gap is backed up by the range of an order block located right at 25% of the previous day's range. And at 50% of the range, price has left a large fair value gap cutting through the range of a bullish order block. Now, in terms of premium targets, right, we're trading near the high of the dealing range. Okay, so first of all, very, very important to see how price will trade at the highs. Does it wick it? Does it displace it? Does it start creating bullish fair value gaps away from it? Or does it fail and starts creating bearish fair value gaps back inside of the range? Okay, at what time of day does all this happen? If it's the scenario where price will displace the highs, then in my opinion, in terms of low-hanging fruit, you want to target this premium order block. You also want to be careful if the market will expand higher, the New York Open. Okay, if you're looking at a potential classic buy, but New York opens inside of this range, it could get choppy in here. Okay, because we'll be trading in premium. Okay, so you got your discount arrays, you got your premium arrays represented by the inverse fair value gap at 50% of the range, 3-week look back. If not, you got the order block at 75% of the 3-week look back. And in discount arrays, in terms of discounts, we're using the arrays left behind by the previous day's range, as those are the ones that are most relevant to the current range. Right, yesterday here price was trading in discount, and so we were using the weekly BISI as our discounted levels, right? We're using higher time frame levels. But today we don't have to do that in terms of discount because of the previous profile, but we need those levels in premium, okay, from a higher time frame perspective. So the fair value gap of 50%, it represents the scenario where price would fail to displace the dealing range high, right? And the premium order block would represent the idea where price expands through the highs, reclaims this fair value gap, and then would trade towards 50% of the bearish order block. Okay, so keep these levels on your chart. I think that very likely the open or the low of the day will form around one of these, but overall you will be able to gauge order flow intraday based on how price did around these discount and these premium arrays. Right? Basically, you want to watch out. Not watch out, but you want to pay attention to the fair value gaps that come out of either of these levels. Okay, these fair value gaps, this fair value gap, or this order block, and at what time of day. Okay, so keep these levels on your chart, and we'll see what tomorrow gives.